Let's go ahead and jump right into business on this Tuesday morning, saying good morning now to our business editor, Mike Apple. We've got a lot to cover, and I know how much you like to talk. It's not me, ever. Right?
What? No.
Let's start, Mike, with the Canada Emergency Response Benefit, extended for 8 weeks, but at what price?
The latest calculation in from the Parliamentary Budget Officer is $17.5 billion, Sarah. So that 8-week extension puts it up to a grand total estimate of about $71 billion. Yves Giroux, the PBO, saying this morning that 8.5 million Canadians have been paid out to the tune of about $43 billion so far. So, you know, how long it takes for the labor market to recover as economies across the country reopen, that will determine the overall cost of the CERB and how long it maybe needs to be extended again into the fall, and whether or not how much of this money is going to actually be clawed back, because it is taxable depending on next year's or this year's tax filings. So there's a lot of balance that still needs to be taken, but we're digging in the debt pretty good here.
To say the least.
Yep.
Let's move on to Canada's oil pipeline. So you're saying there's spare capacity, but for the wrong reasons? What do you mean?
Well, it means that the energy companies had shut down a lot of their production and slowed the flow of oil to a trickle because, remember, the price for oil was at below $0 a barrel. The global economy was shut down, and we have not recuperated to anywhere near those previous levels. So all of those years where we were looking at pipeline constraints, lots of oil by rail, debate about do we need more pipelines, how fast can we get them built, and the political implications and such. Right now, there's actually spare capacity in the energy sector. Lo and behold, the price for Canadian oil at $32 a barrel is less than $10 below the U.S. benchmark. So again, we're starting to see a little bit more balance, though, coming into the market.
We've only got about a minute left. Surprise, surprise. Let's move on to Cineplex. So opening more doors today, which is some good news. But the real worry, Mike, is small businesses.
Yeah, and it's going to be interesting to see, as small businesses, are allowed to reopen, how many will, what's the cost benefit analysis, because if you're only allowed to open a patio, for example, well, your main profitability is when you have people actually inside the restaurant, not necessarily sitting outdoors. The break-even levels for a lot of small businesses, is so minuscule that they have to have everything running. It can't just be on a piecemeal basis. So, and the cost involved, people, these companies, little mom and pop shops have had to, buy plexiglass, buy PPEs, buy all this stuff. It's a cost, and they've got back rent to pay. So you wonder how quickly portions of the economy will resume, even though they're allowed to reopen.
And apart from all the equipment, I think it's the spacing, right? The restaurants now can potentially seat to 100% capacity, but how can you pack a restaurant the same way you were going to before? Even movie theaters. I mean, I think they're separating every few seats.
And menus will also be shrunk. You're not going to have the same amount of choice, and the prices might be up, again, to offset the costs of losses.
A smaller menu is a good thing for me. I'm so indecisive. I know that's probably surprising. I'll see you tomorrow at the same time.
Drive-through. Oh, that's a mess. Thanks.
All right, you can hear more of Mike Epple, our business editor, on 660. But right now at 14 minutes past 8, let's go ahead and take a look at the markets.
This portion of BT is brought to you by 660 News, Calgary's breaking news, weather, and traffic station.